Hey guys, if you're looking for ways to start investing in stocks, then this is the right video for you. In this video, I'm going to share with you 4 simple steps to begin investing in stocks in Malaysia. I'm all about saving your time, so let me summarize the 4 simple steps right here for you. Step number 1. Open a brokerage account. Step number 2. You need to understand your risk appetite. Step number 3. Choose your stock wisely. And step number 4. Place your buy order. And without further ado, let's jump right into the details. Step number 1. Open a brokerage account. If you plan to invest in the Malaysian stock exchange, then you will need a CDS account, which stands for Central Depository System. The CDS account is just like your normal bank account, but it keeps your shareholdings. And if you have or may not have known that there are 2 types of CDS account, direct CDS and also nominee CDS. And to keep it simple, a direct CDS has more advantages compared to a nominee CDS, with the exception for nominee CDS can handle the paperwork for the corporate exercises for you, such as bonus issue, rights issue, and also warrants. Personally, I've opened my direct CDS account through Maybank Equity Investment Center with a brokerage fee of 0.1% or 8 ringgit per transaction. Now, there are 2 reasons why I've chose Maybank as my broker. First of all, they are Maybank. They are the largest bank and the largest company in Malaysia. So I can sleep peacefully knowing that my money is in the safe hands. And the second reason why I've chose Maybank is because I can link my trading accounts and my saving accounts. So I have a bird's eye view of everything under one account. And it just makes the transaction between your share trading accounts and also your saving accounts much more simpler. And likewise, you can do the same with other banks such as Hong Leong Bank, Public Bank, Affin Bank, CIMB, UOB Kay Hian, and many more. And their fees should all be around the same region. The online community also likes Hong Leong Bank, so maybe you can look up for that as well. And just 2 quick pro tip when you open your direct CDS account, make sure you are paying about 8 ringgit or 0.1% per transaction fee as opposed to 0.42% or 28 ringgit minimum. That's a mistake that I've made in the beginning because that is a margin trading account. You do not want margin trading if you are just starting as a beginner investor. And second pro tip, just say yes to the global trading feature when your broker asks you whether you want that feature embedded inside your account. This comes at a 0 cost and will save you a lot of hassle of signing paperwork in the future should you want to buy stocks from other countries' stock exchange. Of course, alternatively, if you do not want the hassle of visiting a physical bank just to open up a direct CDS account, you can also look for online platforms such as M+ Online or Rakuten. Which brings us to step number 2, understanding your risk appetite. Now that you have your brokerage account, you are not ready to buy shares yet. You need to have a clear-cut strategy in your mind before you start investing. So there are 2 kinds of people, one the trader and the other the investor. Traders in general have larger risk appetite because they buy and sell really quick, and they usually buy within a short time frame such as from hours to days and or maybe weeks. Traders typically have a much higher return, but vice versa, they have higher losses because they have to cut loss if their strategies are not working. Their strategies usually rely on technical analysis and is in contrast with investors. Investors, on the other hand, buy shares and aim to build wealth over an extended period of time. Usually we go by years or maybe more than 10 or 15 years. Investors usually perform fundamental analysis on the stocks which have great fundamentals or have really good prospects. And as you can guess from this channel's name, I'm all about investing, and I totally encourage every starter to begin from investing and buy slowly before you explore new grounds. And if you are interested in learning fundamental analysis, stay tuned to this channel as I will talk about fundamental investing in my next video. Alright, so now you have understood your risk appetite and you are ready for step number 3. which is one of the most difficult thing, choosing your stock. Before choosing your stocks, pick up an industry that you are intrigued or you are generally more well versed with it. So just to name out a few of them, you have utilities, energy, the consumer products and services, you have healthcare, technology, financial services, plantation, real estate investment trust or REIT, which is my favorite, telecommunications, media, construction, and many more. And of course, each industry comes with its own strengths and weaknesses. For example, financial services, which are banks, they are very sensitive and very dependent on loans, as their main source of income is derived from interest income. So if people are starting to default their loans, or in other terms we call it non-performing loans, NPLs, then they will start to lose their revenue. And of course, if there is a OPR cut, they will also lose their interest income. And another example are oil and gas stock counters. They usually are more volatile and more prone to the fluctuations of oil prices. So those are volatility that you need to understand as well. So a good advice for a starter is to just pick one or two industries that you are familiar with and just study them thoroughly. Look at the key players in the market and see what are the different niches, what are the unfair advantages that they have in their market, which makes them stand out. Another reason to understand the key players is you can leverage on looking at their strengths and weaknesses and also understand more variables that affects the entire industry. And as a result, as you can guess, you can make better informed decisions as opposed to not knowing what the industry is all about. Okay, that leads us to step number 4, which is placing your buy order. And it's rather simple to place your buy order on your respective stockbroker online platform. So make sure to confirm and to just double check the stock ticker before you purchase your buy order. And you can do this by looking up at Bursa Malaysia website and just to check whether this is the stock counters that you plan to purchase. Your order will come in the form of bought lots, or in a simpler term, one lot will equal to 100 units of shares, which is the minimum purchase amount in Bursa Malaysia. So let me just do a quick maths calculations for a typical purchase. So assuming company X is 5 ringgit per share, and if you are going to buy 2 lots of company X, there will be 5 ringgit per share times 200 shares, which is equivalent to 1000 ringgit. That 1000 ringgit will have an additional of 0.1% of transaction fee, or 8 ringgit. And on top of that, you are going to pay a very minimal sales and service tax as well as a clearing fee. And that's it. Your orders will be submitted to Bursa Malaysia, and once matched, your account will be deducted by the same amount. That's all for now. I hope you gain a better understanding on how to begin your investment journey. Don't be shy to let me know in the comments down below if you have any questions for me. I'll be more than glad to hear your thoughts. You can help me by giving me a thumbs up and also hitting the subscribe button down below, and that will really help me in growing my channel. Some final words for you. Get ready and be steady, because your initial ride will be very bumpy. Thank you very much, and I will see you in the next one.